If someone challenged you to drive your car with your eyes closed, how would you respond? Or better yet, say you boarded a flight and the pilot came on and made an announcement that he was going to fly the plane today with the blindfold on. Well, when you don't deploy the right technology in either your business or your family office, you're going to run into a similar situation. You can survive for a little while, so you can maybe drive your car down the road or perhaps get that plane taxied down the runway just a little bit, but you're going to run into some pretty serious problems right away. I'm Frank Balistreri, partner in charge of the consulting practice at Sensiba. We are a top 100 CPA firm with headquarters in the San Francisco Bay Area, offices along the West Coast, and people and clients spread throughout the United States. Joining me today are Tom Crotty, our family office practice leader, and Catherine Edgecombe, our client accounting services practice leader. And we are going to talk about technology in a family office. So Tom, why don't you take it away and get us started?
Thanks, Frank. Well-run businesses close their books every month. They have data, information, financial reporting that allow them to make decisions and run their companies both from a tactical, short-term, and long-term strategic perspective. We believe families need to do the same thing, and we refer to them as family enterprises. We believe that they need to close their books. Surprisingly, and I know this is a big surprise for a lot of people, but surprisingly, often families do not have good financial information. We worked with one family that it took 6 months to close their year-end financials because of the lack of good accounting protocols within the family office, as well as, and most importantly, because of the technology they were using. They used multiple books, if you would, for different entities, which meant they couldn't consolidate, they couldn't eliminate duplications. It was all had to be done manually. So that was taking them months to do. Well, this caused them to have to overpay estimated taxes because they didn't know their current situation. The owners could not provide banks with their financial information on a timely basis. That caused frustration. The tax folks weren't getting accurate information. It just was basically a pretty big mess. And surprisingly, this happens more often than you might think.
Well, Tom, the problem gets worse because some teams are actually trying to do this in Excel, right?
Oh, that's the nightmare scenario, of course, because now we have Excel spreadsheets that have well-known errors potential, and it causes all that manualness to have to be repeated, checked. I mean, it's a mess for sure.
For sure. There's definitely ways that you can eliminate some of this risk that you were discussing, as well as just the pain points. One of the things that we recommend is taking a good look at the tech stack, not only finding the appropriate and best-in-class accounting software, but also evaluating your bill pay software. Bill pay is so important to most families and is really the cornerstone of good reporting. And best practices really dictate that your bill pay system should integrate well with your accounting software. And your accounting software should integrate with your banks and your credit cards, which will help reduce manual keying errors and provide more real-time data. In addition, it is so important for families to have good multi-entity capabilities.
Which, Catherine, is really important with families because you have multiple generations. You have, the patriarchs may want certain generations to see certain information. And so having that ability, it really affects both how the family operates as well as how the professionals get their information as well.
And Tom, let's not forget the captain of the airplane, perhaps the captain of the boat, or the domestic help. Say you've got a butler in one of your properties, you want to make sure that they have the correct access and see only what they need to see.
So true. In best-in-class processes, make sure you have strong internal controls, but also that you have a solid chart of accounts that is consistent amongst your different entities so that you can look at your books as a whole on a consolidated basis, and you can look at insights for the entire family's portfolio versus segregated reporting for one piece or just one entity.
And it strikes me, Catherine, that one of the key words we might use in this scenario is trust. The more you get current information, good information, and timely information, the better you build trust for the information, and that builds trust within the family, which is really critical.
Absolutely. Trust is the cornerstone to every relationship that we have with our clients. Thanks, Tom, and thanks, Catherine. You guys brought up some really great points. If you'd like to discuss these points further, please don't hesitate to reach out to us with the links below this video, or you can reach out to us directly on our website, sensiba.com. Thank you, and we look forward to speaking with you.